Hello Forex traders, this is a quick analysis on DXY and what I'm seeing on DXY. But before I will start the analysis on DXY, I will tell you one thing, and that is the truth. DXY is currently confused at the moment. It's currently confused at the moment. You all know the theory of price action states that to any to a distributed market, like to an impulsive movement, there must always be a consolidation, and to any consolidation be expecting an impulse movement. So let's do a quick top-down analysis and see what DXY is talking, and like what DXY wants to do. Now, starting from the monthly time frame, because top-down analysis is always without top-down analysis, you won't be able to know what the market is doing at the moment. Now, don't mind this my trend line. It was well placed before as time goes on, because of network and something, the thing will be like shaking. So on the monthly time frame, what can we see? Using price action. Now, first thing first, on the weekly time frame, we would like to see the direction on the market. Now, on the weekly time frame, what could we see? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this is a bullish trend. But market reached this part here, came back to this point here. Now, this is a 50 pip retracement level together with a zone, a key level, because this place that has retested multiple times. So price is likely must come back to this place here, then what? Continue creating a higher high to respect the direction of this market. But what could we see here? We could see that market came here, reacted, went back up, this zone held it, pulled it back here, so it was ranging at this moment. Now found itself above here. Now, so it found itself above here. This was to be a retest continuation, creating a higher high. You understand me? Creating a high high, respecting the direction of the market. But what could we see? We could see market coming back here, then what? Breakdown here. Now this was showing us here, this thing here show us that market wanted to create a higher high, but what? It was exhausted. Now went back down below this zone, below this zone. This zone have been tested multiple times. Now, since we saw that, we knew that this direction of this market here is what? A downtrend. But there was still some minor obstacles that may stop this market, that held this market from going back down to this zone here. Let us know that this zone will be the next take profit. You understand? But the main zone will be this one. I just draw this small zone here just because I don't want some things to be disturbing me. Let it not be that I didn't see it, but the main zone is this. Now, first touch of the trend line, second touch of the trend line, and third touch of the trend line. As you all know, third touch of the trend line always like doing the trick. Like, it always creates a massive reaction on that point there. As you can see, this is the point here. This is the reaction. That is it. Now, DXY is ranging at the moment because we could see an impulsive movement down range. Now, what do you see? An impulsive movement down range. Do you understand? So that is the same scenario here occurring at this moment here. Now, on the trend line, we could see a reversal candlestick. Showing us that market wants to start moving back up. But this zone here held this thing. So this is the factors holding this thing from either going up or down. The trend line and this zone. You get me? But the main direction of this market is bearish. So going to the weekly time frame to see what the market is doing. On the weekly time frame, we can see here the market created a head and shoulder, broke out of the retested, broke out, retested on the key level, came back here, this trend line held it, went back up to this point, came back here, creating a double bottom, went back up, retested on the double or neckline on the double bottom, went back up to this next zone. Did you get me? Went back to that next zone. So we're expecting a push to the upside, then retest continuation. But what could we see? We could see the market did not create anything as such. It did not create anything as such. The weekly time, the weekly candle of last week was bearish and a powerful bearish candle. So going to the daily time frame to see what the market may likely do, we could see that market created a what? A double top at this point here. And you know the theory of double top. The theory of double top states that when they say double top, we'll wait patiently for market to break the neckline of the double top, retest back on it using Fibonacci to check the alignment. Then the next target will be the next zone. The next zone. So looking at this, we could see that market has what? Broke out of the trend line, retest. Then this will be a continuation. So the next target market is eyeing this zone 99.183. That is the next zone market is going to come to. And after that zone, if market could break it, then the next zone will be this. The next zone will be that. So what are we going to be doing now? Since this is a double top at the daily time frame, respecting the monthly time frame direction, showing that the market is currently bearish, because this is the key level that this double top formed on. Now there are two things we are going to be we can take in place. I will wait patiently for this neckline to breaking out, to be taken out, retest, then continuation, or we could enter in an aggressive way. Going to the 4-hour time frame, we could see on the trend line, that we could see a break, retest, continuation, and the continuation candle is very powerful. Can you see it? It's very powerful, showing us the market is going to come to this zone. So this will be the rule of engagement. I will be entering at this point here. So if market open, next target will be here. So this will be like a 1-to-1 risk to reward ratio. A 1-to-1 risk to reward ratio. Let me drag this part to that side to see what it is going to be. It's going to be a 1-to-1 risk to reward ratio. So once market has started to give me profits and market has hit this, I will take partials, carry my stop loss to this point here, then leave it alone to run. Leave it to run. If it runs and goes up, then the more it goes up and pull back to this level, breaks, I'll wait for it patiently to pull back to the zone, then a continuation. That's what I'm going to be doing. But the next take profit with the top down analysis is the next zone here. This next zone. So this is going to be like a 1-to-9 risk to reward ratio. It's going to be like a 1-to-9 risk to reward ratio. So hopefully I'm going to be into this trade on that point there. On this point here, this is what I'm going to be entering. That's what I'm seeing on DXY. DXY is currently bearish. DXY is currently bearish. DXY is currently bearish. With these rules, that markets usually move from zone to zone. I know that this next zone here is a must. This next zone here is a must, because a double top formed. It must always come here to the neckline to see what it's going to do. It must come here. If touch here, then the next thing it may either do is to reverse, But if it could break this yellow bar here, break it with an engulfing candle such as this kind of candle, break out of here, maybe a daily candle or a 4-hour candle, broke out, then I was expecting a pullback continuation, then I'm going to be taking advantage. Then at this point here, I'm going to be entering my normal lot size that I'll be entering, then dragging it back to this point here. You get me? So I'm going to be using the theory of market move from zones to zone for this entry, because DXY is currently ranging at the moment. Now when trading a ranging market, you should be extraordinarily careful. DXY is currently ranging at the moment. It does not have it has not given a clear direction where it is going to. What did I say? Rule of engagement. Enter here with a well calculated risk. Next, take profit here. Once market has come to this place, you want one risk to reward. Take partials. The remaining position, leave them open. Carry your stop loss from here to break even. Then leave it, let it to run. If you hit your stop loss, it's okay. You wait for it to enter again. Come here, pull back. Then when you pull back, creating a matured pullback, you won't enter. If on a normal trade, the market give you the well confluence, like it giving you the direction of the market, and it's just not ranging. And if, for example, you're risking like $100 on this part here. You understand? Let me assume that it is 10% of your account you are risking, and it is $100. You are going to split it into two. Then it will be $50. Now, in that $50, you're not going to just place a one trade, one position of $50. You're going to split it into 2 or 3. That is making it like $15 or $20 or $25 two position. So when market comes to this place that is here, you close your one position of your $25, then you carry stop loss from here to this point here. Do you understand the risk management calculation? So when market has broken out this area of concern, then retest, then you can enter a pullback, a matured pullback, 50 pip retracement level. Then you can enter with your 100 lots, with your $100 stop loss. You get me? Targeting the next zone as you take profit. Targeting the next zone as you take profit. So that is what I'm saying here. So if you're interested in this pair, I would advise you to take advantage. Why the Euro USD is similar to this, but I'm going to be waiting for this zone, though I would have entered at this point here, but I'm a little bit concerned of this part here. If I can see a push, a one candle, a bullish engulfing candle above this, I'm going to be taking trade. If I consign this, then next take profit that. But at this point here, I'm going to be only focusing on DXY. At this point, I'm going to be only focusing on DXY because it's only DXY I could see a high probable trade. So if you like my content, please like and subscribe. Thank you very much. Have a nice day.